All right, so here's Karine. She is coming out to give us all the information that we need for the day.
So next Thursday, President Biden and Vice President Harris will separately meet with President Zelenskyy of Ukraine at the White House. They will discuss U.S. support for Ukraine in its defense against Russian aggression and Ukraine's strategic planning. The president and the vice president will also emphasize their unshakable commitment to stand with Ukraine until it prevails in this war. Earlier today, the president addressed the Economic Club of Washington, D.C., where he discussed the important moment our country has reached. Inflation and interest rates are falling and the economy remains strong. As the president made clear in his remarks, this is good news for the overall economy.
Did you guys see that yesterday they cut interest rates by like half a point?
Because lower borrowing costs will support economic growth. The president knows there is still more to do to lower costs and protect the progress American workers have made. With that, I will turn it over to Jared Bernstein, who is back, chair of the Council of Economic Advisors, to further discuss the progress our economy has made under the Biden-Harris administration. All right, Jared, welcome back.
Thank you. Thank you for inviting.
The only assassin I've ever seen who didn't have shady connections was that dude who tried to get whoever the president was at the time to prove his love for Jodie Foster.
Inviting me back. It's a pleasure to be here. Thanks to Karine and her team.
Oh, it's the inflation guy's back.
For helping accommodate my visit, and to the CEA staff who always help me be well prepared. Earlier today, as you just heard, the president talked about the progress we've made in helping to build a more prosperous and equitable economy on behalf of the American people. He described that progress in terms of sustained low unemployment, job and real wage gains, solid real GDP growth driven by strong consumer spending and investment. He talked about the optimism embedded in the record 19 million people who have filed to start small businesses, the unsnarling of supply chains, the record energy production, the investment in key sectors of domestic production like clean energy and chips to ensure America's position in the global economy. And he marked this moment in our economic progress by citing the actions taken by the Federal Reserve yesterday to lower the benchmark interest rate they control, an action that will help lower the borrowing cost for homes, cars, credit cards, and borrowing to start or build a business. The Fed's action also underscores the historically unusual fact that all of the progress I just described occurred during a period of significant and critically important disinflation. Though these words, thankfully, did not appear in the president's remarks today, in CEA language, he was talking about the very low sacrifice ratio that has characterized this economic expansion. This ratio derives from the historically negative relationship between unemployment and inflation. It describes how many percentage points of unemployment, for example, we would have to accept to get inflation back down to its target. That concept is why, not that long ago, we saw prominent headlines and commentary assuring us that it would take much slower growth. One headline proclaimed a 100 chance of recession last year to achieve the disinflation that has occurred. And yet here we are with 6.5 percentage points of CPI disinflation and the solid economic conditions I described above. Quoting Chair Powell from yesterday, quote, "I don't see anything in the economy now that suggests the likelihood of a downturn is elevated. The U.S. economy is in a good place. More specifically, the economy is growing at a solid pace with inflation coming down closer to our 2% objective over time, and the labor market is in solid shape." Now, we underscore these dynamics in CEA's most recent blog post, if I can get figure one. Thank you. This is a blog post that you can get from the CEA website. What this shows is, in fact, inflation over the period where it went up and disinflated against a set of forecasts that were made by the blue chip forecasters, by CBO, by the Fed's FOMC SEP committee. And you see that the inflation forecasts were quite good, quite accurate. They pretty much follow the dark line, which is the actual line. Next slide.
So you can see here it's going back to its average. It's not even back at the average yet, really, when you look at it from this angle.
That gets very different when you look at the unemployment rate. In fact, the title of...
How many of these new businesses are OF or TikTok stores? Probably all of them. All of them, man.
of our blog is how the economy defied the forecasts. Here we have the forecast predicting unemployment would have been very high in order to achieve that much disinflation. And in fact, what we have here in the shaded area is the most optimistic and the most pessimistic estimations of where the unemployment rate would be by the blue chip forecasters. These are the most optimistic because they're the lowest. We beat the most optimistic forecast when it came to unemployment. Next slide, please.
So you can see this recovery happening from COVID.
If in fact the forecasts were correct, this is how much more unemployment we would have had, how much more unemployment households and American workers would have been stuck with if we hadn't beaten even the most optimistic forecast on unemployment. And you can see those numbers range from 1 to north of 5 million unemployed persons whose fate was avoided by the trends I've showed you thus far. And finally, figure 4 shows the same dynamic for GDP. Again, beating the most optimistic forecast of the blue chip, which in this case would be the upper part of the shaded area. I'll close with another.
Unemployment is down because they kicked everyone I know off of it. Dude, I couldn't even get unemployment. When I got out of the military in May, they did everything that they could to try and deny me unemployment. And I'm entitled to it. I'm honorably discharged, yada, yada, yada. It's not even easy to get unemployment. So I'm not sure what they're even talking about here.
Another important reference to the president's speech today. The part about
unemployment is so bad, dude. The process is you file online. The website immediately rejects you. So you have to call into the actual unemployment office. They don't answer their phone. So what they've done is they've made a system where you have to go to a third party, which is a charity. It's not even really affiliated with unemployment office. So you go to this charity to call the unemployment office because they have a direct line to unemployment to get the issues that they denied you for fixed from the website. It makes no sense. And so what you have is you have a bunch of people filling into these buildings trying to get unemployment, and they're frustrated because they can't just call these people on their cell phone and say, hey, help me out. You can't email them. There's no way to contact them. They created a system where you cannot contact them without going to a third-party charity. And then even then, a lot of times, their direct number doesn't even work. So you still can't contact them. So you've made a system here where you auto-deny people unemployment and then try to say that unemployment rate is going down, which is complete bullshit. I almost wanted to whip out my phone and interview those people for my YouTube channel, but I considered it kind of be maybe not classy. These people are struggling. Me, myself, trying to get unemployment. I don't know if I would want somebody to do that. But I thought about it. It crossed my mind because there's people in this building and they're mad. They are yelling. They're furious because they need this money. They've been, let go from their job or whatever. And they made a system to where you pay money into this unemployment, but you cannot get your money. That's not actually there to help you.
And you heard this from Karine, our work is not done. As he put it, I am not here to take a victory lap. I'm not here to say the job is done. I'm not here to say we don't have more work to do. Of course we do. Our cost-cutting agenda in particular is as urgent today as it was before the Fed acted, but that fact should not prevent anyone from recognizing the progress we've made, the expectation-defying ongoing expansion, and the work, productivity, and grit of the American people to get us where we are today. And with that, I'll take your questions.
There we go. Questions.
You're, one of the people that the president would call if he has any questions about the American economy. I was curious to ask you, what would you say is an economic issue that the president these days is asking the most sort of probing questions to you about, whether it's a data point or a phenomenon or something that he's seeing in the economy?
Well, I've been talking to the president a lot in the last few days, as have met many other members of the team in preparation for the speech he gave today. So I am ready with a very timely answer to that question. It's the same. It's a similar dynamic, similar conversation I've had with Joe Biden since I was his chief economist when he was the vice president. He wants to know how these economic developments, how the progress I've talked about today that he spoke about affects working families like the one he grew up in. And right now, that relates a lot to the interest rate cut. How does a cut in interest rate ripple through to the economic lives of working American families? And the answer that I shared with him, and I'll share with you, is lower costs of lending, lower costs of a mortgage, lower costs if you want to take out a loan to improve your home.
So the idea behind that is as they allow more loans to go out, well, they're not allowing more loans to go out, but as you bring your interest rates down, people are going to assume that more people are going to want loans, which is going to drive up the housing market. We just kind of have to wait and see if that's actually going to happen. I saw a lot of people on X yesterday were thinking this was going to be the next 2008. Oh, it's the doom and gloom. I don't think it's really that bad. But at the flip side of what he's talking about, I don't think the American people want to hear Joe Biden take a victory lap right now. Most of them can't even afford milk or bread. The last thing they want to do is hear Joe Biden pat himself on the back.
Lower costs of auto loans, credit cards. If you want to start or expand a small business, lower interest rates are really meaningful to people. It's one of the it's really one of the key economic variables in a lot of people's lives through that channel of borrowing costs. And that's certainly, I think, a timely example of things we've discussed lately.
And how did you prepare him for the possibility of the Fed making the kind of cut that it did yesterday?
Having conversations much like the one we discussed. I mean, we're very careful, as you know, to respect the independence of the Fed. But of course, we're always going to talk about any important dynamic or variable in the economy. And so this is a conversation we've had, and it goes right to the impact of it goes right to the impact on the economic lives of the families we discussed. I think also part of this discussion has been about the trajectory of inflation. And here, I want to underscore something I said in my topper, but also the president leaned in today. Very important to him. We've had a lot of discussions about this. So direct answer to your question. He's been very interested in these predictions that said, sorry, you can't get this much disinflation, 6.5 points on the CPI, without accepting a much worse unemployment rate or much slower GDP growth. That is the more kind of traditional within those shaded areas in the figures I showed. And the president felt strongly that we were not going to achieve disinflation on the backs of working people. We needed to get there through improvements in the economy's supply side, through energy production, through cost reductions in the areas where we've tried to do more of that. So maintaining the strong economy on behalf of working families while getting to lower inflation has been essential for rising real wages and incomes, and that's what we've seen.
Hey, Chair. Thanks for being here. One of the issues that has still proven to be very difficult is getting housing prices down. Can you walk us through, do you have any kind of numbers to put on housing prices and the importance they play within the CPI bundle in terms of, now that we've had the interest rate cut, how much more is it, our housing prices going to come down? And then I asked this question yesterday, but I want to ask you again. I mean, with the escalating tensions in the Middle East and the possibility of a broader regional war growing, how do you assess the impact on prices, both in terms of oil and other factors?
Okay, so on housing prices, you're very much correct that the CPI as well, the CPI in particular, but the index I was showing earlier, which is PCE, different index, they have heavy weights for housing, CPI in particular. In the CPI, the housing weight is, I think, around 35%. It's shelter is the single largest weight, I believe, in the CPI.
So here's the thing. The Biden administration has came out and they said that they want to not more Harris. This is more Harris's campaign. She wants to build more houses because she believes there is a shortage of supply of houses. And I'm not arguing with that, but as you lower interest rates and more people are able to purchase, there's still a low supply, which the only option there is to raise prices because less people are going to want to sell their house as a deal, right? They're going to want to make money because they have a high demand item. That's just common sense. So that's my take on it. Chad says a half point lowered on interest still can't compete with Vanguard coming in and paying cash for houses. Exactly, which still affects supply and means it's probably going to go up. We're going to see housing continue to go up, which in turn inflates the housing cost. Exactly. So, I mean, we agree.
And so it's very impactful. And one of the ways we showed that in a recent blog that we did, which I think, I commend to you because we really dive into your question on the CEA website, is we pointed out that if you look at core inflation over the past year in the CPI, that's inflation without energy and food, 3.2%. Core inflation CPI without shelter, half of that. 1.6%. So it really gives you a flavor of how heavy that weight is. Now, there are two things going on with housing prices in the CPI. One is cyclical or mechanical, and the other is, or maybe call it, something, well, one is cyclical or mechanical, and the other is structural. So the mechanical part is that as rental inflation has rolled over, and it really has, I mean, the inflation of rents was highly elevated. It's now back to levels that we saw pre-pandemic. And this is rental inflation now, not the price level, but the inflation. As that has rolled over, most CPI analysts have expected that to filter into the index by now. We haven't seen that. It's a bit of a head scratcher. I think Powell talked about it yesterday. He referenced that the other part of shelter costs, owner equivalent rent, which I won't get into the details, that's been coming in stronger than expected. So, but simply based on the mechanics of the lags and the rollover in rental inflation, we still expect that to show up as easing in the CPI's housing component. But much more important from our perspective and from the Biden administration, I'd say the Biden-Harris administration, because Vice President Harris has ambitious plans, is to deal with the structural problem. We have a 15-year in the making shortage of affordable housing in this country. 15 years in the making, millions of units shortfall. And this is a market failure. And when there's a market failure, even the most classically oriented economists believe that there's important space for government intervention. And Vice President Harris and President Biden have, I think, very important and in many cases tried and true policy.
And so that's pretty much what I was just saying. Her plan, Harris's plan, is to increase the supply, which normally it's going to help with lowering the cost. But at the same time, she wants to give a grant for first-time home buyers while interest rates are being lowered. So is she going to be able to build enough houses to keep up with the demand? Probably not. And then you have to think, okay, how are people going to pay for this? I can't remember if it was $25,000 or $50,000 grant that she wanted to give. One of the two. Obviously, that's going to affect the supply. Hey, thanks for the sub there.
Policy measures that would help reduce that shortfall, expanding the low-income housing tax credit, subsidizing developing and building in ways that would make those deals, that make those developments pencil out in a way that they don't right now. We could spend a lot more time talking about housing policy, but you can find it out there. I think addressing that shortfall is absolutely critical. I'd call it one of the biggest pieces of unfinished business we have, but we can't do it by ourselves. Congress needs to work with us, and there is zero reason why this should be a red or a blue or a D or an R issue. This shortage is pervasive in states across the nation.
Middle East.
On the Middle East, so when it comes to geopolitical conflict, there are other people who can stand up here and talk about that with more authority. What I'll say is from an economic perspective, of course, we monitor that very closely, but I think it's instructive, important, and in the context of my discussion to you today about how working families are doing, the breathing room that folks have been getting from low gas prices at the pump relative to where we were a year ago is really remarkable, especially when you consider the extent of geopolitical conflict in an an area where a lot of an area of the world where energy is often produced and shipped. And this morning the gas price was $3.22 a gallon. I believe that's 68 cents per gallon down from where it was a year ago. That's real breathing room. It's one of the reasons why year-over-year CPI is 2.5% in the last read, close to where it was pre-pandemic. And we think that's an important piece of breathing room. We would also argue that the president's fingerprints have been on that, both whether it's a matter of the release of the strategic reserve, but also record energy production from all sources.
He didn't want to comment on the rental prices, huh? He knows how to avoid the topic. Exactly.
Thanks, Jared. The president, in his remarks about an hour ago, said that he had never spoken with the Fed chairman since he's been in the White House. That's obviously not true. He met in the Oval Office in 2022. Can you clarify the president's remarks there and why did he say that?
Sure. The president was saying that he has not spoken to Chair Powell about interest rates. He did not pressure Powell and has never done so. And in fact, in the speech today, that was in the section about Fed independence and about the importance of respecting and honoring that.
Why do I feel like that's not true? I know they want to create a separation from the Fed and the president, but to say that they haven't spoken at all about him dropping interest rates, I don't know, it just seems weird. We're about to have an election and they're going to drive up prices by lowering interest rates. The stock market's about to boom. I don't know. Maybe I'm a conspiracy theorist. They shouldn't talk about gas prices coming down if the last 3 years the president doesn't control gas prices. Exactly. They're going to claim all these wins, man. And somehow they're going to deflect on all the failures that they've had.
At independence, it's obviously a stark contrast with our predecessor. Never has the president spoken to Chair Powell about interest rates as president. Never has he pressured him. And the reason for that, and I speak to you now as an economic historian, is that countries where that independence have been compromised, economies where that independence have been compromised, have been brought to their knees by inflationary pressures time and time again. So by respecting the Fed's independence, the president has done a very important service and has made a real contribution to where we are today.
But he spoke an hour ago, what were you saying?
The president was saying he's not spoken to Chair Powell about interest rates as president. That's certainly what he meant. And he certainly didn't pressure him in that discussion that occurred in May of 22.
Thanks, Jared. So this rate cut is colliding with presidential politics. At what point do you think Americans will start to feel the broad economic improvements that come with this rate cut? Would it happen before the election?
Well, hopefully I can buy a house before these prices start to skyrocket and I'll feel more comfortable with owning property for once now that I'm almost 35 years old.
Well, let me start with the political reference. I'd like to quote from you from a Wall Street Journal lead editorial a couple of days ago. Quote, "We don't agree with those who say a cut in rates this week is political or intended to help Kamala Harris." Now, I don't think the ed board of the Wall Street Journal is associated.
Fast forward, you're going to see Kamala Harris campaigning out there and she's going to say, look at the stock market. Look at these numbers. Look at all this money that we're making. Business is booming. It's going to be political. I don't know what this guy's talking about.
Much with Democrats or liberals. So I take that as a statement that I very much agree with on the non-politicalization, I don't know how to say that word, on the on the fact that what Chair Powell was doing was monetary policy, not politics. Now, your more relevant question is about when people start to feel these interest rate cuts, right? That was the other thing you asked. Interestingly, the first part of that answer is already. Because of the priced-in dynamics, that is, the mortgage rate, we talked about housing a minute ago, you go back a few months, it was 7.5%. As of this morning, it was 6.1, I believe, 6.15, if I'm remembering correctly. That's a big step down, and that occurred before any Fed rate cuts took place, in large part due to the market expectations that those rate cuts were going to occur. So that's a priced-in effect. Now, then there's the dynamics in in auto loans, in credit card loans, in business lending, and that can take anywhere from weeks to months to quarters. I think Powell talked about it rippling through. So that occurs with more of a lag, but some of it's already priced in.
And do you think the Fed waited too long to cut rates?
I'm not going to comment on Federal Reserve monetary policy.
They actually came out and said that they did wait too long. They were supposed to start cutting in July, and that's something that Powell already admitted to, that he was kind of they're more reactionary than they are preventative, because they don't want to make an overstep. Paul says, yo, I'm hoping to be able to afford rent until I croak. Me too, brother. Me too.
Yeah, thanks. Jared, the previous president, no matter what the state of the economy, no matter what was going on, every single good thing that happened, he personally took credit for immediately, saying this is the best economy ever. We've had more jobs ever than anywhere in the universe, et cetera. Should this president have done the same thing in order to cheerlead more and get people more excited about the state of things?
I'm an economic advisor, and I try to stay in my lane. So, I have, over the course of my long relationship with President Biden, tried to give him a little political advice, and frankly, he doesn't want to hear it from me, and I respect that. But let me say the following, what your question makes me think. I think that where I go with that is, what measures has President Biden taken wherein those policies help to lower inflation, help to tackle some of its causes, help to get us where we are today? Because I think that's actually an important part of this explanation. One of them we already talked about. By respecting the independence of the Federal Reserve, after his predecessor repeatedly criticized the Fed and undermined its independence, simply by respecting that independence, that helped give them the space to do the monetary policy they believed to be needed to get us here. As I mentioned again, and he cited this in his speech today, he unleashed record energy production to lower gas prices. He brought together, this is one of my personal favorites, he brought together business and labor to fix our supply chains. This is the unsnarling of supply chains that was so important to the disinflation. And one of the charts that we highlight a lot at CEA is, if you look at measures of supply side snarling, supply side constraints, and you plot them against the commodities or the good components within the CPI, they track each other very closely. In fact, I'll make sure to put that up on my Twitter feed, EconJared46. Give me a follow. Later today, to show, and that is something that comes directly from the Supply Side Disruption Task Force, of which I and my colleagues here were card-carrying members. And now he's rebuilding our infrastructure and investing in the manufacturing sector to strengthen these chains. He took on Big Pharma to lower prescription drug costs. So these are concrete measures that we've taken to help get us to where we are, and I would argue President, Vice President's fingerprints are on these results.
Thanks for being here. Vice President Harris has her housing plan to build about 3 million units. Should she become president, and should that legislation gets passed? How important would you say was the rate cut? Should her plan see the light of day? How important was it for the Fed to start lowering those rates?
I think when without getting into, again, the Fed's monetary policy or where they're going with interest rates, my initial comments about how important lower interest rates are to consumers certainly applies to people with a mortgage, looking for a mortgage, thinking about refinancing. I actually think it's a pretty different bucket relative to the housing supply policies. I'll say more about the 3 million units. I'll say more about that in a second. But one thing that I think and hope will happen is that there are a lot of people, and actually Powell talked about this as well, but we've been talking about this for a while. There are a lot of people locked into their current mortgages, okay? They want to move. I've heard stories about divorced couples that want to move, but they're stuck in their house together because they have a 3% mortgage, and what's out there in the market has been a lot higher. One of the things I think we see when mortgage rates start coming down, and I've talked to a lot of experts to try to figure out what that number might be, is the unlocking of that lock-in effect. Now, that doesn't necessarily lead to a lot more housing supply the way her or the president's policies would, but it does create more churn. And people who are stuck in a starter home, they move to a different house, and that starter home becomes open. And that's the first rung on the ladder for families trying to get into trying to build their wealth through home ownership.
Sure.
So that churn is actually, I think, would be quite helpful. And as mortgage rates come down, we expect to see that.
We own a rundown single wide and pay lot rent in a little town in Spokane. If we had to move in this market, it would be back to mom's. Yeah, dude, I totally agree with you. Last quote that I got, even on a VA loan, was 5.5%. And when you actually look at the payment for what we would get for considerable, like what we rent here, it's significantly more. It's insane. So I'm kind of curious to go back now, since these rate cuts have happened, and to see what a mortgage rate would be for me. I have good credit. That's the one thing I do have going for me, but I don't have a down payment. I don't really want to, and with the VA loan, I don't want to give a down payment. So I'm going to have a higher mortgage rate, but I want to kind of get something nice. So I don't want the housing prices to inflate too much, like what's probably about to happen. So there's a lot of different factors going on here that I'm considering, but I am curious to see what the mortgage rates are now that they've cut this 0.5 point.
When it comes to building 3 million affordable units, again, I won't go through the policy description I did a minute ago, but I will talk about one, the low-income housing tax credit, of which expansion is a big part of both her and the president's agenda. Expanding LIHTC, which is a tried and true program for building affordable multifamily households, so this is on the rental side of the equation, is a policy that the banks like because they buy the credits from the developers. The developers like it because it makes the buildings pencil out. And housing advocates for low-income renters like it. That's a pretty rare triumvirate. So expanding LIHTC is a great idea, as is, I mentioned earlier, a set of subsidies and tax credits to make building affordable housing pencil out in a way that it does not do so now. We also have some measures that help ease some land use restrictions. I won't go into them now in the interest of time, but I think we have a powerful agenda in that space.
All right, Naomi.
Thanks, Karine. Thanks, Jared. Last night, the former president proposed a temporary cap on credit card interest rates at around 10%. Is that something that the Biden-Harris administration thinks?
Yeah, I saw that last night on X. So he wants to, Trump being he, wants to cap credit card interest rates at 10%. So I thought that was kind of interesting to see what would be at play with that.
It's a good idea.
I think that happened today. Or what did you say?
I thought it happened last night.
Okay, maybe it happened last night. So I haven't had a lot of conversations about that yet with my colleagues, and I would wait before that. I will say the following. I think you have to be careful with things that people throw out there without a lot of thought or consideration. You have to think about what kind of impact that might have. There's risk factors that go into that kind of a policy that might make it harder for a lot of people who need credit to be able to get it because companies won't sell it to them. So I think you have to be careful about unintended consequences. What I will say is that this administration has taken a very forward-looking and very, I think, pretty deep run at many of these issues, helping to lower credit card fees, helping to make for one of the, I think, most effective consumer financial protection bureaus, something that the Trump administration consistently tried to shut down and gut. So when it comes to protecting consumers, this administration, I think, has a track record that isn't just about, throwing off ideas that may or may not be effective.
That was actually a good answer. We should be questionable about policies like that. Wouldn't guaranteeing tax rates and subsidies for everyone just put all the builders set the prices at the increased pricing? I don't know what you're saying there. Guaranteeing tax rates and subsidies for everyone would put all the builders set the prices at the increased pricing? I'm confused. They're telling everyone that a billionaire is not a trustworthy source of managing money.
Two quick questions. One, the president in his speech today said that he expects interest rates to continue to fall. What gives him that confidence?
I think what the president said was a reference to the SEP, the Survey of Economic Projections, that comes out with the Fed report yesterday, where members of the Federal Open Market Committee put where they think interest rates are going. So he was simply referring to the published SEP.
It seems like the trend is they are going to be going down. And my timeline is probably around like December. Start looking for a house, and I have until June on this lease. So sometime in between there, if they keep cutting rates, hopefully that'll be good for me. I can get a lower interest rate, but we have to watch and see what it does to the market here as well. Hopefully it doesn't inflate instantly. I'm just kind of curious to see what happens to the economy in Florida because of this. If they know everyone is getting a $25K grant, wouldn't they just increase the pricing at $25K higher, knowing that they have that money? Absolutely, that's what it's going to do. And when you already have a low supply and you're putting these homeowners who normally couldn't afford these houses into these homes, what's that going to do? They still need money to pay for the loans, right? They still need to be able to be financially able to secure the loan. So is it really helpful when you're pulling from the tax monies to do that? It's very questionable because you're increasing the price as well. That's going to happen. I don't know, man. It's complicated.
The Congress is going to have to, before they leave, pass a short-term spending bill of some kind. That there seems to be talks between 3 months and 6 months. Does the council have a preference for kind of how that's worked out, how long it lasts?
I think the way we would put it from the council and probably from the administration writ large is that, well, let me tell you where we would put it from the council. So we are at an economic moment that I hope I've conveyed to you today is unique, is strong, is leading to real wage and income gains, disinflation amidst strong growth, lower inflation, lower interest rates, wages and incomes growing. This is a solid economy.
I don't know anybody whose wage is actually growing or even feels like their wage is growing. Even people that are actually getting raises don't feel like they're making more. Maybe that could be my biased perspective of the people that I'm around, but I don't see that. That's questionable when he starts talking about that.
Now, you heard my quotes from Chair Powell yesterday, and it's an economy that is getting back to the kinds of conditions that we've wanted to see for a long time. Making an own goal kick in that economy is not only a bad idea, it's malpractice. It doesn't, it's not like it's not like government shutdowns, send the economy off a cliff, but they are a negative. They do lead to losses. Now, sometimes those losses are made up on the other side of the shutdown, but there is no reason for us to go through that. There's never a good time for that own goal kick, and it's particularly bad now. The only path forward is through bipartisanship. House Republicans should stop wasting time and work across the aisle to pass a short-term bill to keep the government open and provide emergency funding for disasters. Congress knows how to do this. It's not complicated. They've done it on a bipartisan basis many times. Given the economic conditions I've been touting here today, given what we saw yesterday, given the information in the president's speech, this is no time to be playing those kinds of games.
He's campaigning now.
Thank you so much, Jared. Thank you. Farm bill, farmers and ranchers. Thank you so much.
Jared, thank you.
All right.
Farmers and ranchers like